Good morning, everyone, and welcome to the European crossover webinar. Let's go and see what's going on as far as news. So we had German industrial production came in weaker than expected, and the Eurozone Centex index also came in weaker than expected. Coming into the U.S. session, not really anything that we have here on coming into the into the U.S. data. As we roll into the next day, we'll have French trade balance, UK industrial output, Eurozone GDP will be somewhat of a mover. Canadian housing starts. Now once again, that's going to be Tuesday, and then API, oil stocks, Australian consumer confidence or consumer sentiment. And then we do have Australian employment coming up on Wednesday. But we have this set up, it just shows for the next 2 days. I could push it further, but that's all that we're interested in for right now. So we know that the dollar has gone in, strengthened. As we talked about it on the webinar on Friday, well, on Thursday I had said, I thought to myself, I go, I think this is as far as it goes. I go, the high would be in, the next day, which would have been Friday, or, could push a little bit further, but I just didn't think that there was much juice left. Could we make, and I mentioned that on Twitter with the conversation with Mark Chandler, and I was referencing a comment I'd made, which was, can we make a marginal high, new high? That's always possible. But a new leg higher, I just didn't see that. So let's go on and jump into the charts. Let's take a look here. Nothing here happening. So let's go and jump in the charts and see what's up. So we came into our value zone. I'm going to switch over to that real quickly. And Jim says, good morning, Paul. Thank you for teaching me. I appreciate everything you do. Yeah, I appreciate that. That's from Jim. So that's very kind of you to say. Well, we were looking for this area. We talked about this on Friday, which is, just in case we got like a real strong BAFO non-farm payrolls report. We talked about this, coming down into the 819, but we had our value area, which is here, but we had 804, which is a 38% of the low on Thursday, ECB day, to the high that day, which I guess it was a pretty big day overall. I just thought that when it got up there that we could have squeezed them even higher. That's why I was stating, which, it's higher, but I don't think it's that high. Because, we went into details as to why we thought that. So we've come into this 38%. As you can see, the market is, finding a little bit of a support. Market opened in the 60s in the Asian session. I wouldn't even know where the Asian session is yet when they opened on Sunday, but they stuck up there, and then they finally started sliding down. Then, about an hour and a half ago or so, maybe a little bit longer, then the wheels started to fall off the caboose, and we just started sliding even further. We came into our value zone. Here's our value zone here. So we'll open this up for a little bit closer look. And remember, we marked this off on Friday. And, the market had come up here, and we had a confluence of, resistance up here. This was my target, was 984. And I actually was pointing that out from, I think we were down here on Thursday. But that was my overall target, which is the bottom of the zone, which is the zone being 984 to 1115. I didn't think it could push above 10, at least initially. I mean, it could maybe have, some report would come out and pop it up real quick, but that was my overall target, was 984, the bottom of the zone. We got up to 982. And 970 was 78% of the low of 517 to this high up here, which was 1098. And I think it was Andy that pointed this out, I don't remember, but it was 975 is also the 38% of 517 to 1713, which was the China debacle high. That's like way back here. 1713. That's when everything got all crazy in August. So, you know, we had pulled back on Friday, and then I was saying, hey, look, any moves up to, I talked about that with Blake, I said any moves up to 930, well, up there would be a decent area to get short. And you can see here we came up here towards this 945. I think we got up to 948, I think was the actual high. We can move this over a little bit. And then we pulled back pretty good, and we, you know, had found some support. I think it was in the 837. If we look on a 30-minute, it tagged it right to the pip, and then popped off of it. But you know, we were going to go down to that 38%, and I was talking about anybody that had been short the market. You know, they were underwater, but they would be looking to go on and cover when we made this move to 108, which is what we've done. There's always a possibility that we can dip into the 795. That's where we have support here. So maybe we come into New York session and then we only get up to, like, let's say 820 something, and then we come down, dip, and then test this area here, which I think you'll go and definitely, you know, find some buyers. Well, we've got this zone here, the 756 to 869. And remember, we've talked about how the markets always like to do, I've always noticed this when I ever draw these zones, they always like to go 50% into the zone. So watch this. Boom, right in there. So 50% would be coming in about, well, actually 811. So we got a little bit past that. But I always notice that whenever I draw these zones, the first foray into the zone, whether to the upside or to the downside, they usually go for the 50% of that zone. Now, the key thing really is that 804 is the 38% of this move, and this is on the 2-hour to give us a better longer-term perspective of what's really transpiring here in the market. So it kind of gives you a good general idea. We talked about this in detail on Friday. So let's go and move into the 30-minute. And you remember we drew this as our bias pivot. Remember the 814? Actually, a little bit earlier, the market was finding some nice support right there, but we did make a. But I figured we would still make a run for that 38%. So this was a pretty decent area to go on and cover, because any dips down here, probably the best you're going to get is 786. So this to 804 was not a bad area just to go on and cover if you've been if you were already trading this from the short side. But you have to think is that, you know, the market's going to be held or buttressed here around this area. If they can push them harder, this is where they're probably going to find some good support. But really, like I said, we've got 792. If they could dip them real quick, that 792 is going to be pretty decent for them to hold. You remember we talked about this as dipping into the 782 area was where they found support, you know, when the market was really blowing and going at the time. So, you know, we've come off pretty good, decent amount from those highs, but this is a decent place to go in and cover. We could also take a look at a fib on an extension to see what that would look like also. But I think really the levels are more key, not really what not this here, but we can take a look at it. If that coincides like with the 61%, that might give you a little bit of extra juice there. See how 795 would be the 161% of this recent swing low to this swing high, which was Friday, would give you 161% at the 795. So we could go on and mark that off just as something extra to have. That would have been Friday's high. And Friday's initial low, or very, very early in the morning, which was 8:54. Basically, it's just something else to hang your hat on. Because you know that, like on the 2 hour, we've got 795. You see that right here? And we know that on the we went into details on that Friday on the run up. When they had hit 819, I had 819, TOS had 817, but we had pulled back. That pullback took us to 782. So that's where we may want to go on the next pullback to challenge that 782, and maybe that gets us to the 776. And from there, I would expect a pretty decent bounce from that area. But like I said, this is our value zone where you would, if you're short, you want to be, covering, or if you're scalping, you wanted to, look to buy. And then buy again at 795, but obviously we haven't made that dip below 795. But we'll see what happens. Maybe I'm thinking potentially, although we don't have any reports out, I was going to say potentially we could take a dip in the New York session to the 795-ish area. And I was hoping that maybe they don't come rally up very far and make another dip down, and then that was going to be a buy. But like I said, we're pushing up a little bit from that 38%. But it gives you an idea how you would want to go on and trade it if you were scalping against that 804. So we come down to our bias pivot, which was pretty decent area. 804 is to 38%. And 795 is 161. 804 is 38% of this low of 517 to this high of 982, and then of course 795 is just the extension from this low on Friday, the early low on Friday, I guess I should say, to from up here, which was Friday high, which is 950. We've got here. And then we made that, the 161%. So I think you're going to find some very nice support in this area. Depends on how far we come. I mean, if we can rally up to 828, and we come back down, then they're not going to stop by just going an extra 5 or 7 pips. Then they'll press this, and you might have to do a little bit of homework at around 786 to 776. But I think that that's going to be a very good area to go on and scalp it long, or a very good area. Depending on the rally that you get, a good area for a target. If you're getting short, if you end up getting short and say, okay, they're going to press it, then I would look for them to go and challenge that 792. So if the market comes up into, let's say, the 820s, and you think, what, it looks like it's running out of gas, then, and you decide to go on and get short, then that would be your target around that 792. We can probably push a little bit lower, but that would give you one of your targets to look for. So we'll go in and take a look at some other pairs also. I'm going to be filling in for Blake today because he went to the football game. with Minnesota, so he's going to be out today. So it's going to be a really long day for me. 3 hours. So I'm just going to be really taking it pretty slow, and usually in our hour we're just looking at euro, crude, SPUs, and maybe a little bit of gold, but we'll try and spread it out a little bit. We'll take a look at what's happening here in other pairs. So let's go on and jump into there. Well, here's the dollar yen, and really nothing's changed. I've been telling people don't short this thing, and people still want to keep shorting it. Other than this run here that we had at the 23.78 and up in here, they tagged the 23.63. I keep telling people don't be shorting. We talked about this on Friday. Some guy, DM me and asked me about shorting the dollar yen, and we talked about this on Friday, and I'm just like, this is crazy. I mean, what? There's nothing here, and you know me, I'm the kind of guy that likes to take the other side of the trade, but there's nothing here to give you an indication that this market is going to turn around. And on top of that, there's the idea that, as I said, it sounds like a broken record, but that's the idea that the Bank of Japan will be announcing additional quantitative easing come January. So you're basically just knocking your head up against a wall. Doesn't make very much sense to me. And the thing is these are 2-hour bars, and this market just hasn't really moved that much. I mean, yeah, from down here, but I'm saying is, look at this, just dead as a doggone doornail. So I just haven't messed around with this market whatsoever in quite a while. And I really don't see anything really happening here with this market. Other than if you're just playing for the long side and you're just hanging on, that's about it. And we'll probably make a move up to 124 before this market starts to slide down a little bit. 24 got a level at 23.98, and 24.02 is 161% of 1805 to 2176. 1805 is back here. But I just don't really see anything really happening that's going to make it, that's any opportunities here, other than just if you're just going to get long, just stay long. And we can go and take a look at the dollar CAD. Well, we've gotten up here above 134, and obviously one of the principal reasons that we're here at this level is because crude's in the toilet. And we'll just have to see what crude does. Although if you think about it, with crude, being sub 40, this thing ought to be going up to 34.80 and not just barely poking its head over 134. But like I said, once again, I just, this market, I guess, there's been a little bit of a two-way trade, but all this been driven on crude. And my thinking is, you're better off just trading crude than trying to play this as a proxy. And we discussed that before on Friday. So I wouldn't, like I said, to see where this market is going to go. I mean, I guess we could take a look at a fib here. $34.79 would be 127%, and $35.34 would be the 161%. So I guess we could go on and mark those off. So those give me some markers on the way up. Obviously, if we take out 35, if crude can really fall a little bit further, that might give us that extra drive. And then above 35, maybe this market really starts to run out of gas. And who knows when this will coincide? This could coincide about the same time that maybe the FOMC takes their decision, and maybe we flounder up here above 135, and we hang around 135 for maybe a few days, and then that could set yourself up for the market to go and pull back. Because look how long it's been sitting here, and it's done a whole bunch of nothing. And if you take this range here, you could do this too also. You take the bulk of this range here to here, and you project it. $35.64, which probably might make a little bit more sense because they'll probably overshoot it. So let's mark this off. Purposely taking my time today because, like I said, 3 hours is going to be a long time, so don't want to leave myself with no voice. This is what I would like to see more as a target. Let them not only take out 35, but let them take out 35.50, and then maybe it runs out of gas up here. Then you could probably set yourself up for a nice pullback. Because you got to think of it. As weak as crude has been, and remember, it wasn't that long ago that crude was trading at $50.92. Remember, that was that high? And here we are, we've lost over $10. And look, dollar CAD hasn't barely done anything. So if we get that pop-up, if crude can pull back and we get a pop-up on FOMC and the market kind of runs out of gas up here, I think this could probably present a decent short just on a pullback. We'll have to wait until we get there, but it's just something to keep an eye on. Here we go. So we'll go and take a look at the Aussie dollar. I know we get the Aussie employment stats coming out. We talked about this thing, how it just likes to keep on going and going and going. So we did make another high up here, and now we've pulled back. And we can see we're looking at almost made up to this level, 73.30, 73.88. 74.14 is really staring it in the face, along with this 74.50. I'm going to drag this over here. As I said, I don't trade Aussie dollar anymore. I haven't traded in a while. Maybe I would take another stab at it, depending on how it sets itself up. Well, one market I'm not interested in trading at all, and that's the British pound. That thing is just has too many issues. But obviously, like I said, the 74.14 is staring this market in the face pretty good. But we'll have to see how those Aussie employment numbers come out. 74.50 is pretty huge. The bigger plays is 75. We just don't know if it'll make it all the way up to 75. But we've gotten above this 72.60, which is pretty key. So any pullbacks, this market is going to want to go and defend that, and then maybe eventually we can go on and work our way up higher. All this may not come to fruition until well after the FOMC makes a rate decision. You could possibly see the dollar ease back a little bit, but don't forget, as we go into year end, you could see some pretty good chunk of volatility. So you have to go and be careful with that. Yeah, John says cable, just like the UK in general, has too many issues. It's just a really tough market to trade. I mean, a lot of people really get screwed on this market. Let me just go and pull this up. I know a lot of people like to follow it, so we're going and put it up there, but and by time to go and take a break also. And throughout the show, we'll get into the other markets like the SPOOs and gold and crude. It's just like I said, just trying to pace myself because, like I said, be going and covering on Blake's show. I know you need repeating a whole bunch of stuff also, although we'll definitely repeat on the currencies. So we did go back into this zone here, but we're having some trouble here at this 51.05. And like I said, with cable, man, hard to go and tell what this market really wants to go in and do in many respects. But we'll go in and we'll spend a little bit more time on it. Let's go in and time to go in and take a break.